Hey everyone, and welcome to this video where I will be walking you through how to make a balance sheet. All right, so let's hop over to the computer and take a look at this together. We have the night manager of Willis Transportation Services who had no accounting background, probably a Villanova graduate, prepared the following balance sheet for the company at February 28th for the current year. So assume it's whatever the current year is. The dollar amounts were taken directly from the company's accounting records and are correct. However, the balance sheet contains a number of errors in its headings, format, and the classification of assets, liabilities, and owner's equity. All right, so somebody screwed this up. We have to fix it. All right, so whenever we make a financial statement, whether it's the balance sheet or the income statement or the statement of cash flows or the statement of changes in shareholders' equity, we're always going to start with a header, and this header should list the company's name. So in this case, we have Willis Transportation Service, and the second line in this header should always be the name of the statement that we're preparing. So it looks like the Villanova grad listed this as the manager's report, but actually what this is it's supposed to be the balance sheet. And the third line is always going to be the date at which we prepared the statement. So in this case, the statement is being prepared for February 28th, current year. So February, let's just make this full, February 28th, current year. Okay. Then underneath the header, we're going to list out the main categories of the balance sheet. And the main categories are assets, liabilities, and shareholders' equity. All right, and then each one of these categories will have a total. All right, so we're going to have, I'm interested down a little bit here. So this is going to be total assets. And so we'll list out the total for all the assets. And then we'll also have total liabilities. And then under shareholders' equity, at some point we'll total this up. So we'll have total shareholders' equity. Now, there's also a second total here under liabilities and shareholders' equity, the right-hand side of the balance sheet. We're going to also total up total liabilities and shareholders' equity. And we're going to do this because the balance sheet is based on the accounting equation, sometimes called the balance sheet equation. And what this equation says is that your assets must equal your liabilities plus your shareholders' equity. So this is our rule that we have to follow. When we make this statement, we have to be sure that when we are done, the total of our assets equals the total of our liabilities plus the total of our shareholders' equity. Right, so if we do this correctly, if we reformat this correctly, if we take this messed up balance sheet that the Villanova grad made and we fix it, when we're all done, our assets should equal the sum of the liabilities and equity. All right, so let's look at these accounts. The Villanova grad put capital stock under assets. Capital stock is not an asset. It's not something that we own. It represents the ownership in the company that is associated with an investment that's been given to the company. So we are going to list capital stock actually under shareholders' equity. So capital stock, and the amount of capital stock is $110,400. So $110,400. Okay. The next one, retained earnings. Retained earnings is also an equity account. Retained earnings represents the income that the company has generated but not yet returned to the owners of the company, the shareholders. So this is retained earnings would be the next line here under equity. And the amount of retained earnings was $74,400. What's next? Cash. Cash is an asset. So that is the Villanova graduate got that right. Um, what's the saying? A blind squirrel can find a nut every once in a while, or a broken clock is right twice a day. It looks like the Villanova grad actually got this one correct. They probably just got lucky. $94,800. And then we also have the building. The building is also an asset. It's something that the company owns. So we'll list that building for 96,000. And automobiles, also an asset, also something that the company owns. So it looks like they did a pretty decent job with these three assets. So the automobiles are 198,000. That's interesting. The cost of their building is about half of what the cost of their automobiles are. So that's an interesting setup for this company. What else do we have? Oh, accounts receivable. Accounts receivable is also a asset. And what I'm going to do is I'm going to put accounts receivable ahead of building and automobiles because, as we'll later learn, we want to list our assets in order of how quickly we can convert them to cash. And receivables represent the amounts that our customers owe us, and typically they have to pay us within 30 days. So we're going to list that as an asset towards the top here under cash. The next account, notes payable, that's a liability. That represents a loan from a bank. So notes payable is going to be 345,600. 345 600. And we're almost done here. Supplies are a short-term asset, so I'm going to list this after accounts receivable, but before building, so I'm going to say supplies are 16,800. Land. All right, so we have another asset here, land. This is a long-term asset, so I'm going to list it with the long-term assets here. The building and automobiles are also long-term, so I'm going to say land is 84,000. And then the last account here, accounts payable, 43,200. That is a liability. This represents amounts owed to suppliers. So accounts payable is 43,200. 43,200. And let's open up our calculator here and see what we get. So I'm just going to split the screen here and let's see what we get for assets. So assets, we have 94,800 plus 84,000 plus 16,800 plus 96,000 plus 198,000 plus 84,000. Looks like we get total assets of 573,600. And then if we total up our liabilities here, so I'm going to clear my calculator, so I'm going to say 345,600 plus 43,200. This is 388,800. And then last but not least, shareholders' equity. So shareholders' equity, we're going to do 110, 400 plus 74, 400. We get 184, 800. And then if I total up my liabilities plus my shareholders' equity, if I take the 184, 800 and I add to that the liabilities of 388, 800, we get, oh, what did we do here? 388, 800 plus 184, 800, we get 573, 600. So 573, 600. Our rule here was that we had to have the assets equal the total of the liabilities plus the equity. So our total assets are 573, 600. And I'm just going to highlight this. And then total liabilities and shareholders' equity, 573, 600. And our assets are equal to our liabilities plus our shareholders' equity. We did it correctly. We have a properly formatted and prepared balance sheet. We fixed those mistakes that the Villanova graduate made, so we are good to go. All right, well, in this video, I showed you how to make a balance sheet. I hope you found the video helpful. Thank you very much for watching, and I'll talk to you soon. Take care.